afternoon, everybody. Welcome to Trader Merlin. It is your Tuesday edition, Taco Tuesday, if I can make it, Trivia Tuesday tonight. Sorry for the late start and didn't really have much of a show planned today as I was teaching from 7 a.m. to 1:30 today. So it was a long day of crypto talk. My throat will hopefully make it through the next 45 minutes, hour or so. But yeah, a little drained out here today. So we're going to talk about our mailbag, actually, going into this Q&A. I've got a bunch of questions that were sent in, and I'll probably get more from you guys today, so we'll kind of treat it like that. It is the 25th of, March 25th already. Show 1093 will be our Q&A, and again, if you have questions you'd like me to answer, go ahead and type them on in the chat, and I'll do that one for today. As I was in class all day, I could only catch out of the corner of my eye what was going on with some of these markets. Certainly happy about the MicroStrategy and SMCI still holding in there. We'll see if that ends up being a payday by Friday. But before I dive into that, actually, I wanted to wait for more people to get here because usually that's a pretty good group. You know what? I'm going to start with the Q&A, and then once I see a nice crowd build up, I'll ask you guys a question. I need your help with something. And yeah, the more people that can contribute to that one, the merrier. So let me dive right into our Q&A and just work our way down from there. I've got no real order here, all kinds of different topics, but I want to make sure I at least get the questions answered for those of you who sent in your questions. So let's dive into our first one, which is a good one. I think I've touched on this one in the past, and maybe some of my veterans in here. I've got a lot of veterans in the crowd. Hey, Tim in Minneapolis, Minnesota, could probably give some help to Cooper as well. So Cooper says, hey, Merlin, love your show. I listened to you on KFI a couple weeks ago. What would your suggestions be for someone like myself getting into trading? I'm 28 and have $15,000 to trade. Man, like I start, well, when did I start? I started in 96, so I would have been 24 when I started. So I got to start a little bit earlier than you. I think everyone here would probably echo my sentiment in saying, if you're just starting out in trading, don't rush it, especially because you're 28 years old. You have a long time in front of you. I would also, if I were to make a list here, you know what, let's just do that. How about I make a list for Cooper? And if you guys have stuff you want me to add to that list, let me know. But I'm going to type a list as we go here of just different ideas and thoughts on, you know, what I think personally might help you become a better trader or considerations that you should think about. So let's go and go to there, and I will share that screen with you guys, and we'll call this How to Succeed. All right, so number one is take it slow. And the reason for that is you're going to try to rush into it. You're 28. You have no fear in the world. You probably think you're invincible. You think you're going to just pin the ears back of all these epic financial traders who've been around for decades. Trust me, it's not going to happen. You're going to get your butt whooped if you run into it really aggressively. Number two, educate yourself. Meaning, I want you to go out there and if you want to trade futures, great. Options, great. I don't care what you trade, but understand whatever you're trading, make sure that you understand how that instrument works. And don't learn from, well, as you say, there's a lot of people out there that say they're great traders, but you'll never actually know. You'll never really know until you see their trading statements. So there's a lot of people out there, you know, who have been audited by regulators who have a bad track record for being losing traders, but still claim that they're great. We won't mention any names, but we all know who we're talking about. So educate yourself on how an asset class functions. Take everything that you hear from people in the industry with a grain of salt. I think that in this industry, a lot of people claim to be a lot better than they actually are. So educate yourself, I think, would be number two. Learn about what you're doing and don't rush it. You'll get there eventually. Number three for me would be have a plan. You know, if you want to bake a batch of cookies, oops, I went the wrong screen. You want to bake a batch of cookies, you have a plan. You want to get from California to New York, you have a plan. You want to fly to Mars on a rocket with Elon Musk, he had a plan, right? It's all about having a plan in place. So make sure that you have a plan. And I make sure it's a realistic plan. So for example, let's say you want to make $1 million in a year. Okay, I'm not saying that this is an unrealistic plan. I am saying that with a $15,000 account, that's unrealistic. And maybe we can build your account up over the years till you get to the point you're making $1 million a year, but be realistic. And the reason I say be realistic is a lot of people have this expectation of making 5, 6, 7, 800% rate of return per year. Look, if markets were that easy, everybody would be doing it. If the average annual return of the S&P 500, being generous, is 10%, then you should be making maybe $1,500 a year off your account if you're just meeting the market's return, just by the SPY. Now, can you get more than that? Absolutely. But the more you're trying to make, the more risks you're going to have to take, and that's dangerous. So having a plan at least keeps you grounded and have you understand what's a logical goal. Is making 100% rate of return consistently per year logical? Probably not, right? You can look at some of the greatest traders in the world. They're not averaging 100% per year. No way. Do we have 100% years? Sure. I've had several of them. Love it. Love when I have triple-digit years. That's great. Heck, I've had triple-digit months. Now, those are extremely rare and usually come with a lot of luck involved with that one as well, when you just kind of hit it perfectly. So, I'm gonna read through all yours here in a second. You got a bunch of great ones. So, the one that I've seen come up a bunch. So I've got on my list here so far: take it slow, educate yourself, have a plan, and then I do like this next one, and it's come up quite a few times. I'll give some props out there. Tim says, first thing, get educated. Yep, I love that. I would say I put take it slow first. But Jeff says paper trade, dummy account. Chio says paper trade. Yeah, start slow. Absolutely, go really slow, and then have a demo account. So let's go paper trade. And you're not going to make any money paper trading. Now, I will be the first to admit I am somewhat against paper trading. I know, hear me out. Don't hate the messenger. I put paper trading for me is like watching a video, is like playing PlayStation and going into Gran Turismo, and you're on the Monte Carlo racetrack doing 200 miles an hour in a Formula One race car driver, and you hit a wall. That's paper trading. Because you can make the worst decisions possible paper trading and absolutely crash and burn and get up and walk away from it. You hit the button, your car resets, you're back on the track in your PlayStation game. In the real world, it does not work like that. There's pain involved when you totally screw up. So I think paper trading is probably okay just to get you started, get an idea of what's going on. But I would say you probably want to jump into trading with real money, but very small. So let's say you want to take your 15K and get involved with options, all right? I'd find a stock that doesn't move very much, doesn't have a high price target, and just play there, get comfortable with it. If you want to do futures, then I would go into one contract of something that doesn't have a high margin point. You can, with your account, you could certainly carry one contract of the ES overnight. If you start trading with stocks, pick a low price stock and just trade a couple of shares just to get your feel for it, right? You're not going to go out there and, again, be a professional race car driver day one. They take you out on small tracks with low powered cars. That's a cheap stock until you finally get more comfortable, and then you work way up. So I would put paper trade, and I'm going to put here to learn the platform. I think that's the key, is to learn the platform that way. Then I would say trade real money. Very small amounts of real money, right? To me, that's the key. Start small and build from there. Now, I'm going to say review. Oops. I'm putting, for the podcasters can't read it, so my list now is growing very quickly. Number 1, take it slow. Number 2, educate yourself. Number 3, have a plan. Number 4, paper trade to learn the platform that you're with. Number 5, trade real money, small. And again, you want skin in the game. Number 6, monthly review. So I want you to go out every month and keep very good notes about what you're doing. Journal your trades. Track everything, right? There's some software out there that will do that for you. I'm not familiar with it because I don't use them anymore. But some applications, you can click a couple of buttons and it will spit out a report that says, what are you trading the best? What times a day? Here's what I want you to know about your trading. What time of day do you trade best? Which securities are you trading best? Or which markets are you trading best? You should know your profitability. What's your win-loss ratio? What's your average loss, average win? So it's not just what's the win-loss ratio, But how much am I losing on average trade on an average trade? And how much am I making on an average winning trade? Those are really important numbers to know. I think time of day is also important to know, because you'll find there's certain times of the day that you're actually trading better. And if you're not aware of it, you'll just overlook it and you'll not exploit that little advantage that you have. So do a monthly review, and then I would say implement changes as needed, but make them small. So implement changes, PLE, one at a time. I'm a stickler for this one. I do not like when people make 6, 7, 8 changes all at once, because then you won't know what change impacted what. All right, you won't know how it works. What did you do right? What did you do wrong? You won't know. What improvement, what change changed your trading? To me, that's very key. Now, to add to what everyone is talking about, and I do think that's a pretty important one, I will add to that, and I will say always, focus, Merlin, FOCUS, on risk management. I think even a bad trader can make money trading. It's all about risk management. 100% risk management, well, 99% risk management, right? How well do you protect your capital? And that's going to go back to which securities do you trade best. At the beginning, you should not be out there trading the most volatile stuff. Stay away from SMCI and MicroStrategy until you get comfortable with the actual art of trading. I would go with a diversified ETF to begin with. Which one? Well, it could be a lot of different ones, but if we look over here on our list, I'll go through my S&P list, which is right here. What's the cheapest on this list? Financials, sure. XLF, it's a $50 security. You've got a wide variety of different financial firms in here. Go with that one, right? I think you're okay with that. Everything else that's fairly expensive, getting up over $100. But remember, you don't have to trade 1,000 shares of something. You've got 15 grand. Even trading 10 shares is $500. Fine, trade 10 shares or 100. 100 shares is only going to be $5 grand for you. So you could technically trade 300 shares not using any margin of XLF, but you don't need to trade that big. It's about trading small to start with. Jeff says, start with Costco. Probably not. Okay, as I run through my list here, let me read through our list to see if I'm missing anything. Jeff says, in my opinion, online mentorships are entirely a waste of money. I like group environments where you have people discussing trades. I'm a fan of the XLT. I don't trust mentors. I don't like the term mentor. I don't think that I'm a mentor. I don't like being called a mentor. I'm just someone who likes to trade and talk about trading with others. So I definitely like a community aspect where people are sharing ideas. The challenge is finding a decent community where people are on the same page, which again is why I like the XLTs. It's because you have the same basic background and understanding of trading, and therefore you don't get some rogue individual spewing off all kinds of crazy garbage that just destroys the room. Big Ed says, smaller positions versus paper trading need real emotions. Yep, absolutely. I want to feel the pain and the euphoria when I have a nice winning trade. Drew said, I started with 500 in my early 20s. $500? That's a small start. Good, Drew. August says, paper trade is making me nuts. Trading my real account is very psychological. Yeah, that's why I don't like paper trading. Paper trading sets up unrealistic expectations. And I know, I understand that this is going to be a bad analogy. I've tried my best to keep my potty mouth clean over the years, but this analogy, I think, works wonders with trading and investing. There are plenty of adult magazines out there, and by having one in your possession does not mean that you've been with a member of the opposite sex, or heck, even the same sex, depending on what your orientation is. I don't care. When you really actually get face-to-face with someone in an intimate situation, that's a completely different ballgame, right? It's not even close to the same thing. To me, that is simulation versus actual skin in the game. Paper trading, not fun. It's just for mechanics. It's not to say I made these trades at all. So to me, yeah. Yeah, don't tell me I'm your crypto mentor, Big M. Let's see. Dakota Dog probably does. There's Cantor Fitzgerald. So Cantor, you're talking about the Lutnick, CEO of Cantor Fitzgerald. Obviously, a lot of money. I know I didn't see the statement that he personally owns $1 billion, but I'm pretty sure Cantor Fitzgerald does. I think risk management stop losses should be towards the top. Yeah, I put him down there. Maybe I should move this up. Okay, hold on. Let me modify this just a hair. Hold on. There we go. I've got multiple screens. I'm confusing myself. I'm going to actually move always focus on risk management up to the trading plan. Because to me, you're right. It should be part of the trading plan. Your whole trade plan should focus around risk management, how I'm going to preserve my capital, etc. So, okay, I'm with you on that one. What else do we have here? Also, a great way to help your children learn is practice too. Yeah, include them. Even something as simple as including your spouse, your significant other, your partner in your trading. One thing that has been of interest, having talked to several psychologists over the years and understanding human behavior and the way that we function, we've talked about this on why women tend to make better traders. They tend to make better traders because, and I don't know whether this is a historical legacy thing from that Leave It to Beaver era of womanhood, which is the woman stays home, the woman cooks and cleans, the woman controls all the personal finances for the home. The guy just brings home the check, and that's their main responsibility, is providing for the family, and then the mother or the mom typically was the one who did all the numbers. Usually the woman is going to be much more understanding of where all the money is going, the risk management side of things. And I think as a partnership, you should be sharing that information because men tend to take more risks when it comes to trading. They tend to admit, unwilling to admit that they're wrong, which means we can tend to hold losers, which can erase gains very, very quickly. And having that checks and balances is fantastic. Bringing your children in. I don't have children, but if I did, I'll tell you what, by the time my kid can talk, he's already going to be going, stop loss, risk management. His first words are going to be, all in. No, I don't know what my kid's first words would be, but it's probably not going to be dada or mama. And it's going to be, stop loss, risk management, things like that. So certainly getting your kids involved, understanding the value of money is important. But from a trading perspective, being around a like-minded group. I'm working with a gentleman named Jeremy Johnson on creating some, unique marketing ads and stuff like that for Trading Academy. And one of them that I like, that it's an idea I had, which is, athletes hang out with athletes. Doctors hang out with doctors. Artists hang out with artists. Bums hang out with bums. Who do you hang out with, right? If you want to be a professional trader, you should be hanging out with other traders, which is why I kind of like the group we have here, which is why I still love working for Trading Academy because I'm part of that environment, helping people as I help people there in classes. I'm always learning. I reinforce my discipline, my risk management. I think you got to focus on being a part of a community. It's really, really important going forward and growing your accounts. Let's see. You're going to learn your risk tolerance. What you're comfortable losing. And I think, Jeff, that goes under the have a plan, right? So for Cooper, when we say have a plan, it's you've got to have a number in your head of how much you're willing to lose per day. Now, you have a smaller account. $15,000 isn't huge. So you can't afford to lose $1,000 a day. And I always say this, you should have a number that for you is when you lose this amount, does it change you? I've mentioned this many times. The regulars know that one. If you lose $200 out of your $15,000, will that change you for the day? Will you all of a sudden turn into a different person and be mean and kick the dog and just start angry at yelling at people? Then maybe drop it down to $100 or $50 or whatever you're comfortable with. I discovered years ago mine was $500. Now I've changed since then, but $500 was my number. $500 a day, I could lose it and not care. It would unaffect me. But when I lose $2,000, all of a sudden I start trading completely differently. I'm a jerk. Don't be around me. I don't want to be that person. So set a number for yourself, and that's all part of that trading plan, your stop losses, etc. Yep, that circuit breaker number, 100%. Everyone needs to have it, and the reality is that most people I meet don't have one. Oh yeah, I put a stop loss on it. Well, how much is it? Well, okay, well, you got to have a maxed out number. We all need a circuit breaker. Let's see. Start off with ETFs and research on companies inside the top. Yes, and that was my other thing. Start with ETFs, something that's diversified. But Cooper didn't mention anything about what he wants to trade, right? He just said, I'm getting into trading. So we don't know whether that's going to be futures or options, equities, Forex, crypto. I just don't know there. And again, you have to learn about each one of those markets. Let's see. Vidal says, How to do market analysis. I see there are many factors contributing to market volatility. How to get the confidence about trade I'm making. All right, let me get to that one after we finish this question here. That's its own separate question, but I like it. Lori says, my husband is not at all interested in trading. Happy to let me. Interesting. That's usually it's the other way around, right? Usually the men are the ones that want to do it, and the women are like, whatever, just go ahead and do it. I love this. I love the empowerment, Lori. Good for you. I personally think that in every household, both people should have an understanding and say where all the money's going. Checks and balances. Let's see. Nice, Aga. About my husband in it. Better when decisions are made together. Absolutely. Started $500 trading micro S&P, my TradeStation account 6 years ago, and today just bought $25K with a Bitcoin. Nice. Good for you, Drew. That's awesome. That's awesome. Live for him 7. That's pretty amazing. He says, my son, 10 years old, wheels forward. That is impressive. You know, when I was at, I did an event a couple months ago in Charlotte, and there was a young kid in there. He was 18 years old and very astute, very into trading and investing, which, man, at 18, I wish I was like this kid. But to be there at 10, I mean, live for him. Can you imagine? I mean, I know you imagine, but just if your son continues down that path and is good with risk management, learning a strategy like that will put them literally in the 1% of all students in the country from a business perspective, top 1%, because we'll already have an understanding of the value of money and how to generate money, understand the risk management side of things. And by the time he's 18, 19, 20, he'll probably have a way bigger account. Man, what an amazing thing. That's pretty cool. Oh, thanks, Aga. Appreciate it. And then you started investing in crypto, and now you're okay with 30%. Tofi, about my stop loss. And that's a good point there, Tofi. He's picking on me for my cryptocurrency stuff, but understand that my crypto is a completely different objective, right? My trading is trading. I'm active. I'm constantly buying, selling, shorting. You know, that's active. With the crypto, I'm not active. I'm buy and hold there, so I'm not concerned about that. My time horizon is way down the road. I could care less. You know, we had a huge pullback in crypto. Not worried about it at all. Right? Not worried about it at all. If my plan is correct, then the markets will be fine in the next, few years for sure. Probably the next few months. Vanara. Marlin. No, Marlin's a fish. Marlin's a fish. I'm a magician. Merlin. I'll get to that one in just a second. Let me put a note here. Tesla by Friday. All right, we'll look at that at the end here. I almost go to the event in Charlotte, North Carolina. Cool. Well, I was maybe going to go to the one in Anaheim, but we'll see. We'll see down the road. Okay, so where are we on this list for Cooper? I'm going to shrink our font here just a little bit so it can all fit on the screen. There it goes. I don't know why it's going off the top of the screen, but we'll fix that. So take it slow, educate yourself, have a plan, paper trade. Actually, let me go over to this side. It's better visibility for you. Paper trade, focus on risk management, trade real money, review monthly, implement changes. I'm trying to think of where you wrap this up here. You know, I think overall that's kind of the framework for anyone that wants to get started. I might add in there something like be humble about it and don't get cocky, because that's part of the thing that really ruined me was my cockiness. I just thought I was better than everybody else that was teaching me in the process, and knowing that I always have something to learn. There will always be something new for me to learn as a trader. So I think that's another one in there. And Jeff, that's funny. Lori says, married over 48 years, so my husband trusts me to trade. He enjoys spending what I earn. There you go. Hey, that's a significant other I'm looking forward to. That's great. They make the money and I get to spend it. Perfect. So Cooper, I hope that this helps out a little bit. I think, you implement those changes, and then every year I would go back to step number 2 and just keep that process going every year. You'll start to see the incremental growth. Your accounts will get better. You'll trade better. You'll be more consistent. But if you don't practice, particularly the review and making changes, you'll never get better. If you don't review and you don't make changes, you're going to constantly do the same thing, making the same mistakes, and that will never get you to consistency. So that's how I would encourage you to kind of approach this one, Cooper. At 28, congrats. Most kids don't get involved until they have their first real job out of college, which is going to be another few years. So, you get in your early 30s and you're thinking about 401k and investing. But to understand the value of money and how to take money and grow it is a job unto itself. And I hope it works out well for you, my friend. So thank you. I have 3 questions I'm going to get to, stuff that was going on through here. Jimmy says step 2 never ends. The day it ends, Jimmy, is the day your ticket's punched, right? The day you pass away, the day you die, is the day you stop learning. And actually, let me rephrase that. I think there's a lot of people that are resistant to education, resistant to change. They believe that their system will always work forever. That is not true. As you all know, markets change, and they can change on a dime. Sometimes those changes are gradual, which I prefer the gradual changes so you can kind of build and prep for them. Other times, like we saw yesterday, markets can change on a dime, and all of a sudden you get these crazy whipsaw moves back and forth. That's the nature of the beast. So yeah, it's always changing. Tofi says, trading is not one trade focus item. It's a battery of trades, and the higher number of winners is what makes you a good trader. It's a combination of the higher winners in conjunction with the higher risk-reward ratio, right? Because I could poke a hole in that one, Tofi. I could say, let's just say, hypothetical. This is not my numbers, but I'm just making this up. Let's say someone told you that they win 99% of their trades. 99% of their trades. If you hear that, you're like, man, this person's great. This person's really a good trader. That's not true. They may be a massive loser, because that 1 out of 99 they lose could be a giant loss, and the small winner's like 2 or 3 cents a piece, right? So you want to know your win ratio, I would argue, is important, but it's not the most important thing. If you have a 99% win ratio, but your reward to risk ratio is the opposite way, like 99 to 1, you're risking you're risking $99 to make 1, you technically get a wash. So it's really the combination of those two. Ideally, what you want to do is you want to get a risk-reward ratio that's like a 2 to 1 or 3 to 1, and then have a win ratio of over 50%. If that happens, you'll win. It's just simple math, right? If I know that 51% of the time I win on my trades, and my reward to risk ratio is I'm trying to make $3 for every dollar I risk, with that 51%, it's a simple math equation. Over time, law of large numbers, you'll be a big winner over time. Now, if we can now dial that win ratio up to 55, 60, maybe 65%, and keep that same, the win ratio, and keep the risk reward ratio the same, then you're really off to the races, right? There you go. Exactly. I really learned a lot, and taking classes at XLT, the Trading Academy, the Mastermind program has been a game changer for me. Yeah, and especially for those of you, and I know there's many of you here who are in that mastermind and make the most of it, right? Unfortunately, I think that there's a lot of people who will pay for a class, and they take the class, and they don't put in the effort, and they just expect that you take a 1-week class with Larry or Todd or myself, and you're like, oh, I should be making millions of dollars. That is absolutely not true. You have to do the work. And there's a lot to it. The comment was made here a little bit ago about psychology. Trading is so much about psychology. It's brutal. It's the biggest psychological battle other than, dating, I think. All right. Let me go into a couple other quick questions here, and then I want to make sure I get to, I know we had a question here about Tesla, which I will get to, but I got to get to these ones because they were sent in to me, and I promised I would get to them. So my next question is, and I think I talked about this, John. If money is moving out of Ethereum, where do you think it will go? Which projects? Look, Ethereum is a layer 1, meaning Ethereum is a blockchain by itself. So ideally, it would be moving into blockchains that are layer 1, that do the same thing that Ethereum does, just maybe better. And Ethereum's big problem right now is scalability. We've talked about this many times, but I'll bring it up here. ETH, no. Let's go symbol. If you go look at Ethereum, their problem is their scalability. Now, they have had a nice little hook here at the end, as most crypto, but they just haven't addressed quick enough the scalability. So what's happening is people are leaving Ethereum because it's costly and slow. And where are they going? Well, you have quite a few different networks. Near Protocol is a good one, right? Near Protocol, which looks equally as bad technically, is a much faster blockchain and has much faster finality, much faster transactions, much cheaper cost, However, it doesn't have a lot of adoption. It's not widely used. The other one on that list that is one of my favorites is Solana, which has also been beaten down, right? The whole space has been beaten down significantly. So when you look at the price of Solana, yeah, it looks really bad technically, but it also runs circles around Ethereum from a performance perspective. Much faster block times. I mean, Ethereum's transactions take at least 13 to 15 seconds. Solana's are 400 milliseconds, so half a second. Way faster. Solana can handle 65,000 transactions per second. Ethereum can only handle 15. So, money is flowing into Solana. I would argue that there's some others out there like Sui, Aptos. These are much faster hyperscaler blockchains that could be used. You also have Internet Computer, which, can do 300,000 transactions per second. Do I even have it on here? ICP? Let me bring it up. ICP. And I'll go crypto and add this one to my list. And I'll... why are you not... Oh, there we go. So there's ICP. This is another one that's just been down a ton. So a lot of, transactions isn't the only thing for a blockchain. But I would argue that this is kind of where that money might be leaving, going into other blockchains which have more of a future. Again, Aptos and Sui are kind of the two new kids on the block, but they're also down significantly. I mean, Aptos is down, was down almost over 70% off of its high. So I think all of crypto is just giving undervalued opportunities at this moment. But so there's that second question. What was my third one? Another one about consistency. This is from Kevin. He says, how long did it take for you to become a consistent trader? And this is a real tricky question. So at the beginning, I would say probably the first 6 months were the most challenging because, again, my arrogance, my inability to have a plan, no stop losses. I started implementing trading a stop loss and more of a plan right around 3 months in, but I still struggled. So I would say it was about 6 months before I stopped falling, mainly due to my own stupidity and arrogance. As far as consistency, I don't have a time for that one. I think after 6 months, I stopped losing. But there are still periods where I'll go on a losing streak. So just because I don't want to use the word consistent because that implies consistently meaning I'm always making money. That's not true. There are definitely swings, periods. A couple weeks ago, I had a really bad week a couple weeks ago. That happens. And I think it was a point that maybe Tofi had made. I'm not so concerned with 1 week or even 2 weeks or even a month, right? Obviously, if I lose for a month, that's pretty bad. I shouldn't have a losing month. At least I shouldn't. What's important is to remember that your success as a trader isn't a 1 month span or a 1 week or a 1 day span, right? It's the summation of all the trades you make over the course of time. So while I may make some bad trades that are personally me making bad trades, or the market just not jiving with what my style is at that moment in time, those can all be written off as losses. But over time, the general gist of my trading should be better performance and offset those ones. So, I don't like to say, I have X level of consistency. There's some weeks that are fantastic. Like this week has been absolutely great so far, knock on wood. Last week was fantastic as well. Week before, ugly. It was a really ugly week, but I don't stress on it. So I would say, I'm going to just answer this, Kevin, by saying 6 months is when I pulled my head out of my posterior and just paid more attention to what I should be doing. And that was focusing on risk management, losses, having my plan, and putting rules in place. And from there, the road to consistency started. Certainly I had losing days and losing weeks, but overall not going for the losing years, right? Those are the ones you got to shy away from. So there we go. I consistently have small losses and bigger winners. Keeps me home. Yeah, there you go. I mean, that's the way it should be. You want to have small losses. And heck, I'm okay. If I have really small losses and big winners, I'm okay to even have less than 50% win rate. Right? If you've got a 3-to-1 reward to risk ratio, meaning when I hit it, I'm making $3 or more per dollar of risk. When I lose, I only lose $1. You could have like a 40% win rate, a 35% win rate, and still have a positive account. You could be failing on your trades more often than you were successful as long as the reward to risk ratio is in place. There you go. Consistently not losing money. Yeah, that first 6 months was really brutal. Michael, who I haven't seen in a while, and I didn't think you could email me, but apparently you did. thoughts on SiriusXM. I bring these up here just kind of almost as a joke because, Michael, when are you going to give it up, my friend? When are you going to give it up? Just leave it alone. Now, we had talked about this one back here, I think in mid-2024, and we were talking about maybe if it breaks some highs. It did, and then continued its overall trend. When we look at technical analysis, this thing looks like garbage. Lower lows, lower highs. I would just say leave it alone. It's not looking great. Now, if you also have to look at the business model, and I know that there's some people here who love SiriusXM, right? You got to get your Howard Stern or your Joe Rogan or your podcasters on there, but I don't know. I don't know that many people that are using it. I know when I got my truck, they kept trying to get me to buy it. They gave me a year for free, and as soon as that ended, I let it go. I don't need that type of thing. It seems to me like it's just slowly going to keep on trickling lower and lower and lower as people realize they don't need to spend that kind of money to get good stuff. I could, with my unlimited connectivity on my cell phone, I could just log into different stations and play it through my car stereo without paying that extra monthly fee. So to me, I don't know. I'd walk away from it. And you've got to be holding big positions, but when you look at a price chart here, it doesn't get much worse than this. I mean, it is just lower, lower. And I know what you're going to tell me, Michael, is, oh, well, it's just been going sideways for the past couple months. Sure, it has. But as we know, the trend is your friend until the bend at the end. And that trend is not bent at all. To me, it's still looking lower. So I still stand by the stay short, stay out of it, move on to something else that's going to give you better moves and probability. Remember, they did a reverse split right here back in September of last year. Why do they do reverse splits? Because reverse splits are for companies that are dying. This thing was under $2 or under $3. That's why they did a reverse split. And they'll probably do one again. Let's see what they do. They do another split back here somewhere. I'm trying to find if they did a split. No reverse splits. But that was their only reverse split. Just move on. Let it go. If you love someone, you got to let them go. Let it go. Let Siri go. Because what? I use it for Hair Nation and Ozzy's Boneyard. Hair Nation, huh? Is that your style? You like the headbanger, old hair metal? Get yourself some Winger and some White Snake, some Striper. Spotify and YouTube pretty much do what Sirius does, and for free sometimes. Yeah, I'm sure that there's very specific programs you can only get on SiriusXM, right? We know that there's some stations that are exclusive and they pay big time money to those celebrities to get that exclusivity. I, for one, just don't see the need to pay an extra membership fee. Like I say, Spotify, YouTube, great stuff there. And last one of the pre-sent in questions, and then I will get to the viewer question here about Tesla. Gene says, why is copper on such a bullish move? Will it continue? Yeah, I don't usually follow copper other than as a market indicator. So before I bring up that chart, I've had many mentors over the years and people who just kind of helped me understand the mechanics of markets. Don Dawson's one of them, just a great guy. And, he's in that camp that talks about copper all the time. And his perspective, which I appreciate, is it's an industrial metal. So if you see copper moving aggressively to the upside, it means that there is demand for copper. Now, if we look at what copper's historical primary uses are, it's electrical and it's plumbing, which gives us a clue of economic expansion and growth. And we'll talk about the housing data here. We did see the S&P Case-Shiller Composite 20 Home Price Index number come in higher than expected too, which means housing prices increasing. But the demand side of it is what's driving copper. And I'm seeing numbers out of China talking about massive demand for copper. Now, over the past few months, it has been a phenomenal run. So here is copper's price chart right there. 30% move up in the last 56 days. That is incredible. Wow, really impressive. And I'm going to go back here to a weekly just to set the tone for this one. Waiting so long. Actually, it's weekly. Let's go back to monthly. See how far back I can go. I think the dinosaur starts in 1999. Yeah. So you're at all-time highs. We're at all-time highs, which tells me that demand is surging for it. Now, if it is going into electrical and plumbing construction, I'm curious what's being built, because I've heard so many stories about ghost cities in China. Just absolute ghost cities where nothing's going, empty houses, that they empty, skyscrapers are just empty. So I don't know exactly why there's such demand for copper coming out of China, but there's also big demand for copper here in the U.S. To me, that's a sign of expansion. It's a good sign. And again, that's just because my mentors have taught me that over the years, that like when you see copper, it's a leading indicator for the Dow. That was an interesting one I learned a few years back. So let me go over here, go to a daily, and let's throw on, let's go to, how about diamonds? We'll throw the DIA on there, right? Just to have it overlapping. Let's go DIA. Diamonds, guys, is the Dow Jones ETF. Let's go to all, and then we'll go to ARCA. Boom. Okay. So if that is in fact true, and what I was taught was copper will lead by a couple of months the Dow. Okay. So if copper is surging as much as it is, and the Dow is showing weakness like it is, it's telling me that based off the price of copper, we should start to see that Dow surge and the Dow start to move back to the upside. Now, again, I have my concerns about economic strength at this moment in time, but based off of that relationship, that historical relationship between copper and the Dow, this is telling us that the Dow should be going higher from this point. All right. So there we go. What do we see? Tariff threats are contributing to copper's rise as well, for sure. Right? Especially with all that's going on with steel and aluminum. Maybe China's like, let me get as much as I can while we can. Let's load up before those tariffs hit. Yeah. Cars, electrics, electronics. Yeah. Agree. Definitely a big indicator. Yeah, Jeff, that's what it was Don Dawson and a friend of mine named Fernando actually taught me that one way back. That was going back into early 2000s, like 2001. He would always say, look, man, you want to see where the Dow's going to go, keep your eye on copper. I was like, what, copper? Okay, so, to Gene's point here, will it continue? I don't know if it's going to continue. I mean, no one knows that, but as they say, or as I say a lot, the trend is your friend till the bend at the end. I'm not going to buy copper now. It's obviously moved up way too much. Huge update today, 2.32% move to the upside, but I don't see the need to jump on it now. Maybe if we see some pullbacks, but it just feels like it's going to keep on running. And ultimately, what is this going to do to those other commodities that it's used for, the items that it's used for? Does the surge up in copper, and Big Eb says, we got a stockpiling going on. Yeah, I would think that's probably a big factor in this. What happens typically with stockpiling is unless they use it, it just sits there and loses its value. And then all of a sudden things come crashing back down. So I'm not freaking out about copper here. It's just really clear that there's a massive demand for it. And as everything tends to do, it'll continue in this direction until it doesn't. Now, I, for one, would be looking more for a shorting opportunity just because my gut tells me, and I think I've mentioned this before, my gut tells me that the relationship between copper and like home construction is different than it used to be. Now, yes, it's used for electricity, but I'm looking at a lot of new home construction that it's not using copper plumbing anymore. It's using PTEX, plastic tubing that is much easier to work with and corrosion resistant and things like that. My gut kind of tells me that's going to start to do damage to the demand, at least for that application of copper, but many other applications still exist. So, Gene, that's it. I think it's just the global demand for it. It's the stockpiling. It's a combination of tariffs as well. Will it continue? I'm just going to say yes, it will probably. It's got a higher probability of continuing because that's what the trend is doing. But I don't have a dog in that fight. I don't know any copper at all. All right. Next, I saw a question come in here on Tesla by Friday. And I don't remember the exact numbers that you were looking for, but let me check out TSLA. The way that this thing is ripped over the past few days, I'm really frustrated. I just did not get more of it or get to go an actual exercise of my options, but was collecting some great premium. I had the 210s. That's now officially going to be gone. Here we are at 288. Now, where do I think it's going to end? Look, I think that your $300 is certainly going to be a big psychological number for this, all right? It's right in front of us. We can see on the chart here that it's been moving up aggressively, certainly over the past few days. You hear this talk about Trump bailing out Tesla and doing all kinds of things to save it. Who knows what's going to happen there? But I'm looking at it as certainly a bounce reaction. You've got a little bit of ways to go to get to 300. Do I think it could get there by Friday? Absolutely. I still am nervous about the rage against Elon Musk. I still think that's going to weigh on this one. So sometimes I'm just a little nervous on buying it, even though it's had a monstrous rally right here. Again, I mentioned last week that I was waiting for it to dip a little bit lower. I guess I got too greedy on this one and I missed my Tesla. That's okay. We've got other markets I'm working on. I forgot the number that you wanted there. I think it was something with a T, Ty. I think you talked about the 290s. Will it get to 290 by Friday? I do. I think we'll probably get to 290 tomorrow. The question is, do we break above 300? And is this just a short-term bounce in this giant sell-off here? Or is this the actual now Tesla's back? Chris says Tesla's a meme stock. It trades like a meme stock, but it's not a meme stock. It might have that volatility. It's just loony the way it trades, but it's a legit company. Steve says, I missed out lots of business by selling puts, a good premium, and didn't get the stock bought. Yeah, I know. That happens a lot. That's okay. For me, it's okay. I don't mind, Steven. There's certainly, I have accounts where I buy outright, but I've been doing, with this show, I'm predominantly just showing the options side of things just because I don't want to share all my accounts. The sympathy rally for Tesla will lose steam any day. Yeah. We got a bunch of protests going on and people are out protesting in front of Tesla, dealerships and factories. It's kind of silly. But I still think that that's going to have an impact. The question is, what is that impact going to be on their next earnings? So, we have a ways to go till we get to that next earnings announcement. We're looking at April 29th will be their next earnings. And my gut's telling me that it's going to be pretty ugly. That they're going to talk about deliveries down and some of the numbers are way down. But look at the expectations right now. The previous announcement reported was 73 cents. The expectations are already 49 cents. So they have lowered that target estimate significantly. The estimate or reported reported revenue is $25.71 billion on the January earnings call. They're expecting 23.03. So certainly a lot of pricing of negative is already in Tesla. Certainly will be a wild and crazy day when that one finally happens. All right. Let me real quickly run into your economic calendar because I want to just look at this one real quick because it was important for today. That's the S&P Case-Shiller Composite 20 Home Price Index. I like it. Notice the past 3 months, we've seen it slowly tick up by 0.1%. That's good. The Case-Shiller Composite 20 Home Price Index represents 20 major metropolitan areas. And the more that those values increase, that's more wealth. It's more paper wealth at least, where people now can take loans against their home, have more of a sense of wealth, and buy more stuff, more consumption, and that drives GDP. So this is a good sign. It doesn't necessarily mean there's going to be tons of spending, but at least we have seen a steady move up here, and we're beating expectations the last 3 months in a row. Other than that, you had the HPI numbers, which were down, but right in line with expectations at 0.2. And then new home sales. I thought this was interesting as well. It's been relatively flat for the past 2 years, but today we did move up the expectations on this, where we were going to go to 682,000. We only came up to 676. So we increased, but not as much as expected. So there's your day for that. And let me show you what's cooking for mañana. For the U.S., you've got durable goods, and several members of the FOMC will be speaking, as well as crude oil inventory. So that is pretty much it for you for tomorrow. And then on the earnings announcements, we do have a couple names on the earnings announcement for tomorrow. There was GameStop today, and they blew out earnings. They beat by 230% on earnings, but we're only up 5%. Here is what's happening for Thursday. We'll go by market cap. You've got Cintas, Paychex, Dollar Tree, and Chewy. And that's it. Tsingtao Brewery also. There you go. Trivia question. What is the oldest brewery in the United States? It's an embarrassing fact. The oldest brewery in the United States. What is it, guys? And gals. Well, I read through some questions here. Let's see. Had every intention to do Mastermind. And my center closed and notice. Oh, sorry, I'm on. Well, Mastermind is all done online anyway. Is GME going to buy Bitcoin? I didn't see, Damiani, any comment. I've been in class all day, so I didn't get a chance to see that one, what they said. But that's the rumors that they're going to. Close. I know, Mark, you got it. It's not yielding. It's Yingling. Yingling. Does that sound American to anyone here? Yingling. When I learned that one, I'm like, what? That just does not seem right. You're like, I envision it's going to be like a Sam Adams, right? An American patriot. It's going to be Budweiser, Anheuser-Busch, right? Coors. No, Yingling. That's our oldest brewery in the United States. Crazy. It's all right. It's a decent beer. Okay, that's going to do it for me, everybody. Apologize for not being more market-centric today. Again, I didn't have a chance to really watch it. I was teaching all day tomorrow. Tomorrow, I'm going to have more time. I have a couple really interesting calls tomorrow. I'm meeting with an AI company tomorrow about creating full-on AI characters and avatars, and I'm curious how that happens. It's not fake news. Check it out. Yeah. It's weird. You can barely find it west of the Mississippi. It's really an East Coast thing. Yeah. Oh, Anchor Steam. That was a good beer, Jimmy. I loved Anchor Steam. I think Anchor Steam closed, but I do believe that they were rebought, and I believe they're going to reopen the brand. I mean, that's a California classic. Great beer, too. Anyway, we should do a whole beer show. There you go. All right, I'm going to wrap it up here just because I'm exhausted. My throat's killing me, and my dog has been neglected all day. Got to take the puppers out for a little W. So that will do it for me, everybody. I hope I got your questions for Gene, for Michael, Kevin, John, and Cooper. Thank you for the questions. I appreciate that. Sorry it took me so long to get to all those, but if you have questions, you can email me, tradermerlin@gmail.com. I'm happy to incorporate them into the shows. Usually I sprinkle them into a show, but today, because I just didn't have a lot to go with, I just said, I'm going to do all listener questions here today. So hopefully you learned something along the way. If you have special segments, share them with other people. Like it if you want. If you're new, hit subscribe. That said, I need your help on something. Don't leave. Here's what I need your help with. I'm going to ask tomorrow as well. I'm going to have a meeting with a designer who built a lot of the components for this show on Friday. And the talk with him and I have been, look, I need to rebrand this whole show. I want to do different segments. I want to do different things visually. So from a look and feel perspective, if some of you have thoughts, ideas, maybe that you'd like to see visually, set changes, but more layouts of shots, like things like this, where I've got the split screens or, our different components. I'm looking to rebrand a lot of this image-wise. So if you got any ideas, certain things you want to know, let me know. I will email me at tradermerlin@gmail.com and let me know. I'm going to have a meeting with him on Friday, and I'm probably going to do a whole rebrand of the logo, the look and feel. And I know some of you guys are pretty big in that space, designers, and you got great ideas. So if there's things you think would be fun to incorporate in, let me know, and I'll see what it would take for me to have it all built out for me. So that said, now I'm out of here. Guys, have a fantastic day. I will see you all mañana.